Wow, look at Tesla. We're up 11% today. If you remember, a couple of days ago, I was calling for 175 this week, and we have hit it today on Friday. Hey guys, what's up? Welcome to the Daily Show. We'll be going through the technical analysis of all the most important charts today to let you know our price projections using our custom indicators. And make sure you stay tuned into the end where I'll give you my final diagnosis on the market and how I'm personally positioned. Please remember, this is not financial advice. Okay, let's go check out the main markets today. So it was a bit more of a continuing theme of what we've been seeing this week, the continuing rotation into growth and cyclical areas of the market and out of defensive. So SPY was up just a little bit, Dow was actually flat, Nasdaq did well again, up 1%, and we have clearly broken the trend line and are now testing this overhead resistance zone. So we still need to get through this before we can have more confidence that we're in a real new kind of bullish up leg out of this downtrend that we've been in for over a year. So there's still some more confirmation needed. And same with the small caps. We're approaching the top of the kind of bit of a resistance here we need to get through, as is the Dow. And SPY is still not quite up there. If we just zoom out to a weekly, it's still lagging the other indices a bit, and it's still got a bit of a roof over top of it at the moment. Internationals came off a bit today, had a bit of a breather, except for Canada and Japan. Although they weren't down too much. It's just to be expected. They've been a real strong parabolic uptrend. So Europe was down 0.5. VIX up front dived today, down 29-day volatility. We've got 30-day at 1850, and we've been thinking that this support zone here is going to break, and we are going to go down towards 15 with more bullish moves in the market. Over to put call ratios, there was a lot more meme stock fever in the market today, so there was a lot more retail traders buying calls today, as evidenced in the put call ratio. And there was a lot of big meme stocks moving today, which I'll get to in a bit, but let's just keep moving through all the other markets. So we had cyclical sectors really perform well versus defensive today. If you've been watching, that's been the main theme we've been talking about this last couple of weeks, is how well they've been outperforming off this bottom here. So this is a real encouraging signs for the market when you see the growth cyclical sectors start to really outperform like this. And same with tech. It's really broken its downtrend versus big board stocks. Small caps are up a bit, and growth versus value looks like that's broken out of its downtrend as well. Yield curve just came off a little bit. It was flat. 10-year still hovering around 350. Bonds came off a little bit. Dollar's flat, kind of still sitting here, figuring out what to do. Bitcoin flat as well. Commodities came off a bit today, 1.1%. Dr. Copper came off a bit, 1.3%. Gold basically flat. Oil's down. Natural gas, this could be that huge volume yesterday. This could be a bottoming process. We're going here. We're still 40% below the 50 bar. This could still be setting up for a great risk reward trade here. So we're just keeping an eye on this and looking for more signs of a bottoming before getting in long again. Uranium's really strong, 1.8% in a nice little uptrend. ARK trading like it's 2021, up 5.5%, the biggest sector today. That'll be on the back of Tesla, which it holds. And like a lot of these cloud internet stocks that were once high flying, they seem to have formed this basing pattern, and a lot of them, like ARK, are breaking out of that basing pattern. So that's really interesting and shows of like risk coming back into the market. Industrials holding up, as are the transports. Energy had the breather today, as did gold. Clean energy did well. Real estate, which we've been watching this resistance line for a few weeks, has broken through. So that is another further positive developments. You can see financials are coming up to the top of its resistance zone here, so it'll be interesting to see whether we get through that. But so far, that's kind of looking like a bullish. You could almost call this an inverted head and shoulders pattern. Communications doing well, just riding that top of the band. Typically when price comes to the top either side of the band, it'll either pull back like we see here, or it'll kind of like walk the band. So it looks like it's walking the band, which is a sign of a strong parabolic trend. Tech is broken out of its downtrend, tech stocks. So that's a more broad-based look at tech, and that appears to be doing well. Same with discretionary. We go back to the medium term. Same with discretionary. If we look at the medium term chart here, we can see it's breaking out of its kind of downtrend zone, which is another sign of the market kind of getting more risky. It kind of looks like the market's saying that there might not be as bad as a recession as thought, but it's kind of, there's a lot of mixed signals out there in the market, because the bond market inversion, how deeply inverted we are, saying there is a bad recession coming, and then the Fed is increasing rates, saying no, we're going to get above 5 to get hold of inflation. But then we've got these growth and cyclical parts of the market rallying and breaking downtrend lines. So it's not really clear cut what's going on, and there's still a lot of more confirmation needed before we can start calling this safely a bull trend. But it is interesting to see these growth sectors start outperforming. We can see here on, we'll just go the longer term chart, we can see retail is breaking up above its resistance zone as well. Semis still coming up. It's definitely looks like this could be call this an inverted head and shoulders as well, but it's still got this big resistance zone on top to get through. Bots, we like bots. We did a piece on our channel a couple of weeks ago on why we think bots is a great long-term play, and that looks like to be riding the band as well. Biotech sitting up there too, breaking out. And then if we look at all the defensive sectors like healthcare, below its 50-day, looking really flat. Staples below, looking flat, got this big down day on volume, looks like to be a bit of a bear flag. And utilities as well. So there's definitely a clear rotation into the growth cyclical parts of the market and out of the defensive areas. And if we look at BlackRock, it's a nice bullish pattern as well. Mega cap tech, Apple's out of its downtrend line now and above it. Microsoft's coming up to its downtrend line, and Amazon is broken out of its one. Google's still got some more work to do. Meta just ripping as usual. We really like this stock. We've had this in our equity long short portfolios, doing really well for us, and we're going to be holding that for a bit longer. Semis still got a bit of overhead resistance there, and AMD and Nvidia as well. Nvidia, although Nvidia's just broken out of these last swing highs in August and May last year. So Nvidia's doing well, and we actually like that one. Netflix had a bit of a pullback. Tesla, if you remember a few days ago earlier in the week, I was saying I wouldn't be surprised to see 175 this week, and it sounded like a crazy call, but I just knew this had the spring in it, how much shorting. I mean, there was even a lot of popular fund managers coming on CNBC back here saying, I'm short the stock now. Well, good luck with that. Look how late you are. And so their positions already moved, almost 50% against them. So I think this thing's I don't think it's fully done now. We're only 17% above the 50-day. And if we just go change the look back on our distance to mean indicator to 1,000 days, especially 4 years, because there's 252 trading days approximately in each year. And we'll just wait for that to load for a sec. And we can see Tesla has gotten as extreme as 95%. So this table here shows you the top 8 extreme readings of how far price has been from the 50-day moving average. And you can see down here we've got 41%. If you look over here, we got 41% below the 50-day. And that was a second extreme. So we knew we were really oversold. But you look at the top 8, 61, 63, 68, 75, 95%. We're only 17% above now. And if we go out to the longer term chart, it looks like we've completed a 5-wave countdown, and there's a lot of overhead here around 190. I'd say up to 200 if we go to medium term. And if we just draw a Fibonacci from this low here back earlier this month, from the high back in September, the 50% retracement's around 207, and if you look here, it's be about bit above the buy sell band, and I would say that would be the target. I would say 200, 210 over the coming week or two would be the target for this move. And sure, we might consolidate and pull back a little bit after all this buying, but my expectation would be we come up and tag this 50%, and then the market would have an opportunity to resume its downtrend if it wanted to, and we'd have to redo the counts. Or if we took out this 50% with conviction, and then if we took out the 61.8, that could then make us call a new uptrend and invalidate, break this downtrend. So for now, we've been calling this a bottom since down here. It looks really good. Huge volume today. I'd say a lot of shorts just bit the bullet today and got out. But I'd say there's still more in there, and maybe new shorts coming into it as well. So as far as I think this could go further. Moving on, meme stocks had a really good day today, like 2021 again. So that was on reports that the Saudi investment fund wants to take out the rest of it, the stake that it doesn't already own. So that just rocketed today. And Carvana up 19%. AMC, look at GameStop, 14% on volume too. So a lot of retail in there feeling alive. Other good signs like General Motors is up 4% today. And have we had Hasbro off 8%, and they're laying off 15% of their staff, and they've got weaker sales. So that's a bit of a mixed signal out there. Coinbase did really well, breaking up 15% on volume here. American Express did well on their outlook and numbers. Intel was off, and I don't think this is indicative of the economy, but more a story just to do with Intel and how it's just been losing share now to AMD and Nvidia for a couple of years. I mean, they used to be the clear leader in chips. They're struggling just to get back to that spot now. So I think that's more to do with them than a sign of the overall economy and market. Visa, which was more a sign because it's linked to spending on credit cards, consumer sentiment, that's just gapped up 3% on strong volume and looks good. Okay, so what do we think overall? Really positive signs, more continued rotation into growth and cyclical names. So far, so good. Seems to be holding. There is mixed signals out there, but overall, I'm still feeling bullish. And we've got things like we just had a good GDP come in. And I mean, if the market keeps seeing signs that there's not a recession coming, I think that's a good reason why it could keep rallying up. We've got the Fed decision coming out next week. That'll be the big one. Market's pretty much priced in a 25 basis point increase from 450 to 475. So that's pretty much already expected. There shouldn't be any much surprises there. Then we've got jobless claims on Thursday, and then unemployment rate and non-farm payrolls on Friday. So that'll be big things the market will be keen off to look for signs of any possible further deterioration in the economy. Or if things are holding up, then risk markets could even just price in a lower chance of a hard landing and more chance of a soft landing. And so this swing up could continue, and we could easily take this out and keep going. You can see here on the medium term, we're only 3% above the 50 bar. Historically, it can get up to 26%. So this could still come up, and we could still come up and test this August high, and it wouldn't even be a bull market in my mind. It could still bounce off that and fall over. So far, so good. A lot of international equity breadth. And if you remember yesterday, I came into the market today with the portfolio tilted 40% net long. I have kept that 40% net long going into the weekend. So that wraps it up. Hope you guys have a great weekend. We'll see you for another big week next week with more earnings coming out with the Fed and jobs data. That'll get some volatility going in the market, and I'm sure there'll be a lot of price action to review and discuss. Until then, have a great weekend, and we'll see you on Monday afternoon.